Hey, everybody, welcome back to the Loan Officer Playbook Podcast, the podcast where we talk about proven insights and strategies in loan origination. Today, we're joined with Seth Bellas. Seth has been in the mortgage industry for over a decade and is a producing branch manager at Churchill Mortgage. Seth is also a top 1% producing loan originator, and he's been running his own branch for the past 5 years. Welcome, Seth.
Thank you, Michael. Glad to be here.
Amazing. So, Seth, we've been talking for a while, and one of the things I noticed about your story is you come from a non-traditional background. And I am curious, being an English major, a lot of people think you need to be a sales guru to succeed in producing loans. But what has been your success? Like, how has your background being an English major helped you, coming to loan origination and being successful?
Yeah, that's a great question. I think, you know, a lot of this job, in my opinion, if people don't connect with you as a person, then it's really tough to sell any product. And that's not just true of mortgage lending. I think that's true in almost any business. And a lot of, this is probably true of a lot of people who are watching this. A lot of the business that we get comes from referral partners, comes from past clients. And so you could say that, for a lot of us, it is a relationship based business. And a lot of relationship depth is about the level of communication that you have. If you want a great relationship with someone, you tend to communicate really well with those people. And so for me, I think being in the English world, I was able to develop critical thinking skills, writing, and then also just the ability to connect with people by using words. And obviously it's also a personality thing too. But I think it's one of the great things about the mortgage business. I don't think that you have to have, a quote unquote traditional education background to do it well. There's one of my business partner was homeschooled. I was homeschooled, and so for a lot of my schooling career, my background is just in just doing things that are very unrelated to the mortgage space. So I certainly think it's mostly about how are you going to show up and what are you going to apply to it, and then are you good at building connections? Because ultimately, if you can't get leads, nothing else matters.
Yeah. So it's like maintaining relationships, creating them and nurturing them, following up all these continuous moving pieces with referral partners, the clients that you have. How have you been able to, let's say, connect the dots between maintaining a relationship between a referral partner, let's say if it's a realtor or a builder?
Yeah, I mean, I think ultimately, like we said at the beginning, or like I said before, it is about how are you showing up and what kind of time are you putting into those. I think that as I've gone, the longer that I've been in this business, I think when I first started, it was a lot of just like calling people and trying to sit down for coffees and trying to build, trust. I had to establish myself as a member of the marketplace that could add value. And then as I've gone on in my career, I've been a lot less custom and a lot more systematic in my approach. Because if you want to build a business, I think you can't afford to stay custom forever. You have to have some semblance of, well, we have, the XYZ process that we follow to stay in touch with our realtors, to build new relationships with realtors, and then also to maintain our clients. And so I think it's maybe less important what you do or how you do it, and it's probably just more important that you do something consistently, because staying in front of people is probably the number one thing that I think helps our clients come back to us and our partners stay loyal. And so I don't know that there's a secret formula outside of making sure that you're staying in front of them regularly and continuing to build a little bit of depth in that relationship over time.
Yeah. The consistency in staying in touch with them is absolutely key. I want to double click on something that I think I wanted to talk about, but I skipped over. You mentioned you were homeschooled?
Yeah, yeah,
Oh,
I
man.
was up until I was 16. Um,
Wow.
Yeah, and I actually, when I went to college, when I went to high school, I went there primarily for two reasons. One, so I could play soccer, and also so that I could go to a local community college and get college credits while I was still in high school. So I did dual enrollment for the last 2 years of my high school career and actually graduated with, I think it was 13 credit hours that I could then take with me into my college, the beginning of my college journey.
Yeah. How was that being homeschooled? Like, did you have company with siblings? How was it?
So I'm the oldest of 7 kids, and so I did have a lot of company around, but we were also very involved in sports. Was very involved in our church growing up as a kid and different programs within the church. So I know that that's kind of a thing with homeschoolers that people will notice or point out that homeschoolers can be somewhat socially awkward. I don't feel like I ever really struggled with that, apart from my teenage years, which all of us were awkward probably during those stages. But I think that as I don't see my background as a homeschooler as a detriment. I actually feel like as I got older, and I was doing a lot of my schooling kind of independent of anyone else. So I was following my lesson plans and I was going through the, motions, and I was having to learn kind of on my own. And I think that that taught me something at a pretty young age. When you're in school, everything is scripted, everything is kind of laid out for you by your teachers. For me, it was like I was learning on my own. I was self-taught in a lot of ways. And I think that that actually has helped me in my career, to be a little bit more independent, to have this desire to learn kind of on my own and continue to grow. I've always been very curious, and I think that that's a good thing. I think that curiosity is a pretty good thing.
Yeah. What I like about you is being able to, turn your strengths, even though they can be non-conventional to the mortgage business, um, into how you succeed in the business. Because I've seen you put out a couple of content, in the last couple of months, and it is a relationship business, and it's how you show up for people, how you get in front of people. Do you think that's something a lot of producing branch managers or loan officers should be focusing on doing? Let's say creating content on social media, trying to be thought leaders.
It's tough because it can feel overwhelming to do it, and I think like most things, it's like you're probably going to not be very good when you start. I know I wasn't. There's one time I was recording a video and I literally spent 4 hours trying to put together a 3-minute video. Okay. And I think it takes time. It's like any skill. You have to learn how to do it well. And I think people don't like hearing themselves. They don't like seeing themselves on camera. But we have to be honest with ourselves as mortgage lenders that the next wave of home buyers uses social media a lot, like Instagram, and I mean, you can do it for other programs as well or different, pieces of software. But I do feel like long term, the industry as a whole, you need to have a social presence, in my opinion, because people are probably going to engage with you on some level online. And if you don't have, a robust online presence, or, if it's bad, for example, then that could be something that impacts, I'm sorry, your future business. So I don't have a game plan right now to pull leads directly from social yet. It's more about just establishing myself, like you said, as a thought leader in my marketplace and someone who has things of value to offer in terms of advice or wisdom.
Yeah. So if I'm a producing branch manager and I want to start my own social media and do a social strategy, where do you recommend I start?
I think Instagram is where you're going to see the most traffic. That's where the majority of people, especially even at like Instagram, captures a pretty wide range of ages. And so I think Instagram is probably where I would put the majority of my energy. I know YouTube is a great platform as well, so I would say those two are probably pretty big. We do stuff on Facebook, although I don't think our Facebook gets as much engagement as our Instagram page. So I would say if I had to choose one platform to really just put energy into and get up and running, Instagram is where I would go. But usually my content is on Instagram, Facebook, and LinkedIn, because if I'm going to do a video, then I want it to be something, I want to get as much like use out of it as I can. So if I can expand that audience to, from 500 people to 1,000 people, I want to do that because I'm already paying and spending the time to record it. I might as well make sure it gets in front of as many people as possible.
Yeah. I would imagine like counterintuitively, because Facebook has a little bit of an older audience, that maybe Facebook would have people who are in the home buying stage of their lives. But I'm curious, you found more traction on Instagram.
Well, that's really more just like that's the advice that I've gotten from, the person that I partner with to put together my content. So that's not my, expertise. I think part of it too is also where's your following? Like if you're a loan officer that has a lot of friends or a big following on Facebook, for example, it probably is more important that your content is getting posted on Facebook because that's where you're going to get the most views. So it's really more about like where can you put energy or where can you post that content that gets the best traction. But I don't see any reason why you couldn't have multiple platforms on different social media accounts that have a different audience.
Yeah. So like you need to have an audience that you can jumpstart. It's like posting something into the ether and then you have zero people who are going to watch it and then expecting to have like a million views next day. It's absolutely impossible.
Yeah, I mean, you could get lucky, but the things that I've heard about how they categorize things with the algorithms, it's like you want to be consistent, in posting content, and then over time you'll continue to rise. But one of the things that I've found out recently too is like the active users, like people who are posting comments and liking different posts on those different platforms will get prioritized. And so if you want to expand your presence, it's not just about posting content, it's also about engaging with other people on social media, especially people that have a big following audience. Those people are going to then pull, you're going to then pull some of their followers into your network potentially. So that's a strategy that I think not very many people are aware of that I've heard could really pay some dividends in the future.
Yeah. You also mentioned that the next generation home buyer will be on social media. What are some of the trends that you've seen in terms of home buyer behavior?
Obviously, one of the things that I think has gotten a lot of coverage is how difficult it is right now to buy a house and how the average age of a homeowner has continued to go up, partially because so many people who are in that younger category are struggling to afford purchasing a home. I'd like to believe that that's not going to be a forever problem, that we will solve that at some point, whether the market solves it or the government, creates some efficiencies or opportunities for that to be solved. I don't know. Frankly, I don't know what the solution is. Excuse me, and I'm not going to try to posit, a thing that I think is going to change it. But I do have faith that 10 years down the road, a lot of the people that are going to be buying homes are going to be coming from that Gen Z age group. So it's kind of it's a forward thinking model to be investing in building content out and creating a social media platform that people engage with, knowing that that's likely where our buyer and seller audience is going to be coming from in the future.
Yeah. Meeting people where they are. I think it's one of the biggest marketing tricks that I've learned. It's like you have a product to market. In your case, the loan that you're selling is, the product that you're marketing, and then you have someone who needs it, and then figuring out like where that person is, and then trying to go there instead of not having a strategy at all.
It's interesting. I just want to comment. You're right. Ultimately, the loan is the product, but I would argue that when I'm creating content, I'm the product. Like what I'm trying to do is connect with an audience that says, hey, I think Seth is knowledgeable. I think Seth if I were to work with him, he would be able to help me. And I think he cares about making my life better. He wants to actually make a difference by how he does his work. So you're right, the product is the loan ultimately, but I am the face of the product. And one of the things I tell people is, look, anyone can do your loan. There's, thousands of loan officers licensed in my state who could do your mortgage for you. So it's not about the mortgage itself, it's about the experience. It's about the conversation, it's about the empowerment that we provide. And, really for us, one of the phrases that I've kind of coined over the past couple of years is building a clear mortgage plan. That's the thing that makes us a little bit more unique.
Yeah, that's something that I've never heard someone put it that way. Like you are the brand, you know.
Which is scary and awesome at the same time.
It's
I
like,
mean, one of the things I joke about with my team is, what's our exit strategy if for some reason, I run into another car, and all of a sudden I can't do loans anymore. Like, what are we going to do? I think we would be okay because we've got a really good team. But, I am right now, whether I like it or not, I'm the face of the business. And, when people think about our team and they think about doing a loan with us, in a lot of ways, the way that they're going to associate or the experience that they think we will provide, it's going to be rooted in the kind of stuff we post on social media, the stories that we share, the reviews that we get from our clients. And so, like it or not, I think if you're a producing manager or if you're just a producer in general, I think that you are the brand. Your company is not the brand. The mortgage product that you sell is not the brand. It's about building a personal connection with you and someone trusting you to lead them through that experience.
Yeah. Have you seen Red Bull's social accounts?
Yeah, I love Red Bull stuff.
Yeah, like they never post Red Bull products.
They don't need to. Yep. Yeah. I mean, the most that you'll see of them posting a Red Bull product is like, someone doing a crazy stunt and drinking a Red Bull afterwards. Like that's about all the product placement that they do.
Exactly. And that just made me think, thinking about branding in a while, obviously you are the face of the business, you are the brand, but also individually, your team and your loan officers, imagine them having as much of a brand presence on social media, selling themselves and their expertise as much as you are, that just distributes the amount of traffic that you get. Do you think that is something that other producing managers would be looking to empower their team to also put out content, not only one person in the team?
Yeah, it's a great question. I think, ultimately my team uses video pretty frequently. Like I have a business partner and a loan partner that do use video when we're sending out updates to clients or when we're communicating product options and things along those lines. But in terms of branding, I do think it's really valuable. But I think if you're going to, if you're a producing manager and you have LOs that are working underneath you, if you're going to coach them on how to do content creation and help them build a rhythm for that, I think the best thing you can do first is to do it yourself, because they're much more likely, if they see that you're gaining traction and that it's working and that you've built a consistent rhythm, they're much more likely to just say, hey, I'm interested in that. I would like to be a part of that too. Can you show me how to do that? So I certainly think the more that for a brand, like if it's a team or if it's a collective, the more that you have, multiple people pouring into that or it's building that brand, the more it's going to take off in the marketplace.
Amazing. I will say this to many people that I get on the pod now to, what's your content strategy? Like that's going to be one of my advice that I get with people that come on the pod.
Yeah, I think a lot of it is just swipe and adapt. There isn't a new strategy. One of the things that I try to do is I try to have elements of leadership, because it's something I love and it's something I enjoy talking about and I think I can speak to. So leadership is one. Content creation around mortgage, tips or mortgage financing is another one. And then another key one is just financial wellness as a whole. I think a lot more people are interested in like financial well-being than are interested in, just mortgage as a general thing. So I don't want it to just be so isolated to mortgage content specifically that people who aren't actively engaged in getting a mortgage couldn't interact with my content and get something out of it.
Yeah. I saw that you were even doing financial advice about sports betting.
Yeah, I did do something around that. Yeah, it's interesting because it is something that ultimately, I also want to help people make better decisions. Like, so for me, a lot of what I do when I talk to clients and I sit down and I meet with them, it's like, I want to help you get to a better place. Like I genuinely want you to work with me and come out of that and think, oh, I'm so glad that we had this sit down with Seth because I never thought about doing it this way. Like, for example, it's a pretty common conversation for me to meet with people and, let's say they have a lot of debt. I'll encourage them, instead of putting a big down payment on their next house, I'll say, hey, why don't we put less down and use some of the proceeds from the sale of your home to pay off all of this high rate consumer debt that you're carrying right now. And then you'll free up cash flow and you'll be in a better position in the long run. And so, it's different for everybody, but ultimately, the reason why I think a clear mortgage plan is so important is because it's tailored to that individual client's needs. And we're, like you said at the beginning, we're meeting them where they are. And then we're trying to leave them better for the encounter. You've probably heard the phrase like, always leave your campsite cleaner than when you found it. If you ever went camping as a kid, it's kind of the same idea. Like, I'm not going to change people's lives necessarily by doing some massive thing that's going to totally put them in a different direction, but I can help people make smarter decisions than if they were working without me. And that's kind of the reason why I show up every day and why we do what we do.
Yeah, it's like caring for your customers is one of the best ways to not only help them where they are, but it's a win-win situation for you too. I was looking at your reviews and I saw that you have like hundreds, like over 900 people like consistently saying like 5 stars, giving you like 5 star stars. And I believe if there were more stars than 5 stars, you would have gotten them. And it's all about when you're caring for them. Have you found any challenges in the current state of the market? Rates have been relatively high now for a while. Like, how are you navigating that as a producing branch manager?
Yeah, we've had to change a lot of stuff. Like our whole sales process. One of the things that I think is true is because of higher rates and higher amounts of debt, every conversation that we're having right now, it feels like getting approved for a loan is not as easy as it was. Like the debt to income ratios are tighter, the credit scores are more challenging, the cash, where's the cash coming from? It seems as if it's, at least twice as hard now to do a typical pre-approval than it was maybe in 2019 or 2021. And I think, when you're in a higher rate environment too, your competitors change their strategies as well. And so you're having to adapt to the environment. One thing, at one point in time, I was very adamant, don't buy discount points. Points are bad. They're theoretical savings. It's not a good investment. But I've shifted my strategy a little bit because now buying a point for some people, it's like on a government loan today, I, saved a client 0.75% by buying a discount point on the loan. And so we've had to just change. Part of it too is like, one of the things I've realized is even if I don't think points are always the best strategy, if I'm showing a higher rate to a client in an estimate that doesn't have discount points, a lot of the time what they'll do is they'll say, oh man, I'm seeing stuff way cheaper posted online. And so you lose them, like even if they don't, because a lot of people don't understand how discount points work with a mortgage. So I think we have certainly had to change. One, you just got to talk to more people. Pre-approval takes more time than it used to because there's a lot more complexity. And I think that your sales tactics, if you're still selling the same way that you did in 2020 and 21, you're probably leaving quite a few opportunities on the table.
What are some of the things that you've changed in your sales tactics that have helped you thrive in this market?
Yeah, one thing, so Churchill does a pre-underwriting program that's been awesome. We put all of our clients through the underwriting process in advance of, even starting to look for houses, and we offer a guarantee on top of that. I would say though, like maybe one of the most important, like if I had to say over the past 2 years, the two most important things that we've done as a team, the first one is asking people to commit to working with us as their mortgage lender. I think that's probably number one. In most of our client interactions, we have a meeting. We try to meet with all of our clients either in person or virtually. And kind of like the cap or the end cap to the meeting is, when we're talking about next steps is I'll ask them a question and I'll say, is there anything that would prevent me from being your mortgage lender from now all the way through to closing? And when we ask that question, a lot of the time people will be like, no, or they'll say, I need to think about it. There's different answers, but most of the time people say, oh no, I'm really excited to work with you. But every once in a while, someone will say, oh, your rates are too high, or I'm going to shop with other people. So it's great to kind of know like who is committed to working with you and who isn't. And even though we don't make people sign anything, I think there's this sense in which if they say they're going to work with you, now you've just removed all of your competitors from the equation. If they say, hey, Seth, you're my guy, we're excited about this, thank you so much, let's get it done, then they're on board and they're committed. But the great part is if they don't make that commitment or if they're a maybe, well, then you treat them a little bit differently. You say, okay, I'm not counting on this lead to convert into a closing. Like I'm probably going to lose them to a lower priced competitor potentially. And so the asking that question, I think, has been super helpful. The other thing I would say is past clients. Like we reach out to our past clients 4 times a year with a text message or a phone call. And we also do a monthly mailer. I prepare and write the mailer, and then our marketing team and graphic design team helps design it. But we have a database of somewhere around 2,000 clients, and we send a postcard out to all of these people. And the reason for that, in a lot of ways, it's just to stay relevant, to stay in front of them. Like I call it buying brain cells. It's not my term, but we just want to buy like a few brain cells during the course of a month that we're in front of them enough that they remember who we are. And when they think about mortgage lending, they think about me and they think about our team. So I would say those are the two big things we've done over the past couple of years that have helped us adapt to the market and really increase like our purchase volume business. We had a 50% increase. Last year I did about 40 million. And the year before that, we did about 22. But we had an over 50% increase in our purchase volume, knowing obviously refinances are not happening very much right now.
In this market, oh my God, like 50% increase in this market when there's like an overall decrease. Like, wow.
Pretty happy about that. Yeah, we're obviously you look at the last year and you're like, we could have done some things better, we could have done some things differently, but ultimately, we're pretty happy with a 50% increase. And we actually hit our goal that we set, which, in the world of goal setting, how often does that happen?
The thing you
So yeah, we
mentioned
feel pretty good about that.
about the question that you asked, is there anything that would prevent me from being your mortgage lender, throughout the course of our engagement? I think that's really brilliant because, it reminds me of when you're getting married and then the officiator says, oh, like if anyone has
Yeah, speak now or forever hold your peace.
Yeah. Something.
Yeah, you're right. It kind of is like that. And the great part is if they have an objection, they have to bring it. Like they have to have a reason in that moment to not commit to working with you. And if they don't have one, which often they don't, especially when you're on the tail end of a meeting where you've answered all of their questions, you've built a clear plan, it's just a really great, in my opinion, way to create some stickiness with your client. And then to be able to continue to serve them, feeling confident that you're going to get paid on the back end of that. Because, in the lending business, there's few things that are more discouraging than working with a client and then getting shopped at the last minute after putting hours into estimates and pre-approvals and meetings and all of those types of things. So that's one of the things that we wanted to do, was just create a level of stickiness with our clients that would hopefully help us avoid more of those things from happening. And I feel like it's worked pretty well.
Yeah. And the postcard idea that you send, I really love to, like making it personalized, like sending it out, and you do it, multiple times a year.
Yeah. Yeah. And we meet at the beginning of the year to talk about what our content strategy is for the next year. Like what 12 postcards do we want to send out? Like the one that I just did is what we call our letter from the heart. So I sent that out in January. It's just kind of a recap of my personal life over the past year and, just some things that have happened. So like I had a baby, well, my wife and I did last year. And so it's just telling, talking a little bit about our son and maybe a cool trip that we went on and how grateful we are for our clients and our community. So it's just a really great way for, we talked about building me as the brand. Like it's a really great way for people to associate me with the mortgage product, obviously, but it's bigger than just that. Like now they're starting to get to know Seth as a person, not just Seth as a loan officer. And it's a lot harder to shop when you're talking to a person that you respect or that you like than it is to shop someone that you believe is just a number and a payment number. You know what I mean?
Yeah. That I think is one of the strategies that have been proven to win. I have this example with someone who I had on the podcast. He runs this company called Ethos Lending in Mission Viejo. And he has this thing where it's called an ever-present program in his organization. And what they do is they have their loan officers stalk their past clients on social media. So see if they just had a baby like you, and then they would send them messages that they just had a baby. And I was like, oh my God, would it be interesting to have like an AI do that? So like we built an AI agent where, it would monitor their social media accounts of past clients and then see which life events that they've had. Maybe they just got married, and then it would create, some messages or just send a notification to the loan officer and then send it. But that's actually quite brilliant.
That's a cool idea. I would pay for something like that. I mean, honestly, because we try to do that as best I can. I try to keep tabs on, when clients have major life events. And if I see it online, then we will send a gift or, we will do something for that client. But I know that there's a lot of opportunities, like things that do get posted that I never see. And so if there was a way to capture, that data and then to be able to do something with it, I would do it. Yeah, and some of this stuff's expensive. I think that's like the postcards, every month we have to spend a couple grand on those postcards. But the way that I always think about spending money on creating opportunities is, for me, if I spend 2 grand a month and we write an extra 10 deals because of it, I mean, it's hard to quantify, but I think that that's pretty, that's not an unreasonable number. If I spend $2,000 a month, that's $24,000 over the course of the year. We make more than that on 10 loans. So it's like the math for me in a lot of ways, it's like, can we theoretically point to revenue that's being generated from this lead generation opportunity? And it is hypothetical to some extent, but I think you can get this idea of like, when you look at the past client percentage of how many of your leads come from that database, like for us last year was like 40% of our leads came from our past clients. And so when we see the increase year over year, since we started doing this consistent past client follow-up, it's pretty hard not to think like this is a worthwhile investment that we are making.
Yeah. It's so interesting to see that as an English major, you're pretty mathematical.
I am. My coach described it to me that I'm weirdly like right-brained and left-brained at the same time. Like I love the creative world. Like I like brainstorming and coming up with new ideas and going out and implementing them. But there is a more analytical part of me that helps me when it comes to like building systems or making decisions. But really, I mean, my business partner Josh, man, I'll tell you what. If you want to grow, if you're a loan officer that really wants to grow in the future, it's about hiring the right people. Like I think for me, when people ask me like, how did you grow your business 50%? A lot of the credit that I give to that is Josh. And I would say without question that the parts of the process that Josh now owns for our team, he is better than I would be in that, like doing those activities. So it's not just about hiring someone who can like get the job done. It's hiring someone who is a true professional in that area. And you're going to have to, by the way, you're going to have to pay that person quite a bit of money to come and work with you because great people, demand good compensation and they should because it's worth it. And I really think sometimes people try to like go cheap, hire a warm body, or they're like, oh, I can't give away control. And it's like, well, for me every day when I wake up, I give away a ton of control to my team. Why? Because they're amazing. Like, and they just have proven to me over and over and over again that they will get the job done and they'll do it at a very high level. Now that means, I mean, sometimes they make mistakes. That's true. They make mistakes. And I mean, but I would make mistakes too if I was in their position. So in my opinion, growth in a lot of ways is not about working more hours or developing some system or, becoming a superhuman. It is about hiring people who complement your skill set and that you can just kind of say, hey, this part of the business is your baby. I'm going to step back and just let you take it.
Sounds like every producing branch manager needs Josh in their life.
People that at Churchill all the time, like that is the best decision that I have made from a business standpoint over the past 5 years. We partnered about 5 years ago. Excuse me. And I would say, without question, bringing Josh onto my team was the best business decision that I've ever made. So if you want to grow, having someone that can help you do that at a high level is a huge piece of it, in my opinion.
One of my business mentors uh, always tells me that Your job as the CEO is to build the team of people that would build the product. I think that coins it out perfectly. What role does Josh play?
Really, I mean, his role is evolving a little bit right now, but Josh is really running a lot of the day to day. So he does pipeline calls with the processor. He does updates for our clients. He does a lot of, if we're bringing on a new person, he does the training. Josh creates automation and efficiency in the process. So if there's something that needs to be built, something needs to be tracked, Josh is the one who's spearheading that. So for example, like our past client follow-up system, Josh built the whole thing. And and he really, the way that we phrase it is, I make it up and then Josh makes it happen. So Josh is an executor. He's a builder, and he's kind of like, so if I'm the architect, I'm like, hey, let's do this, and I'm drawing plans, and then Josh is like, okay, do we really want to do this? How much is it going to cost? Is it really worth the time that we're doing? Could we change some things around to make it more efficient? And then if it passes through Josh and it gets built, then we know it's going to work really well. And so that's kind of the role, the way I would describe the difference between where I focus my energy and where Josh focuses his.
That makes total sense.
Yeah.
We're coming up on time here, and I'm having such fun talking to you and hearing all these strategies that you're implementing. But I want to talk a little bit about markets because we've been hearing about this refi boom for the last, I don't know how many years. Like there's going to be a refi boom, and I was looking at data from Mortgage Capital Trading last month, and it never really happened. So when do we expect this refi boom?
I think it's, in my opinion, it's less about expecting it to happen at a certain time and more about building a game plan that you are ready to pull the trigger on when it comes up. And so what I mean by that is like, whenever people ask me what's going to happen with mortgage rates, I'm like, well, I'm sorry, my crystal ball is in the shop. Otherwise, I would tell you. And I also say if I knew the answer to that question, then I'd be a multi-billionaire and I wouldn't be doing mortgage lending anymore. And so I think that any strategy that's predicated upon a rate adjustment in the environment is super risky. Like build your business on purchase transactions because we know that those are going to continue to happen at some level. And yes, the market's competitive, but trying to hope for refis is in my opinion, not a good business idea. So the easy answer is I don't know. I don't know when rates are going to drop, but I do know that when they do, we will capture a large chunk of that business because we have built a total system around, like, we know exactly when our clients benefit from refinancing. Like for us, we've said we want to target two things: a 1% or greater drop in rate and a break even on the refinance of 2 years or less. And so if we can accomplish those two things, we get an alert in our system from, that client is eligible. And then we reach out to them and start initiating the process of building the refinance strategy. So I really do think just having a game plan in place, knowing your clients, staying connected with them, and then making yourself the trusted resource so that if they do think, hey, Seth, is it time to refinance? They're reaching out to you. And the irony is for us, a lot of our loans are serviced by other mortgage companies. And so then these servicers will send mailers to my clients and say, hey, you should refinance, rates are better. And then I'm like, well, I don't think we're quite there yet. But it's funny because sometimes these servicers are actually initiating the conversation that I'm having with the client around refinancing. So I'm like, thank you for doing the marketing on my behalf. If you have the relationship, your clients will come back to you. They're not going to go to Mr. Cooper or, who are the big ones, Penny Mac, to ask those questions. They're going to call you because you're the person that always stays in touch.
Yeah. Seth, thank you so much for coming on. We've had an amazing conversation, such insightful ideas that you've shared with me today. What's the best way for our listeners to get in contact with you?
Yeah, I mean, I think following me on social media is a great way to do that. But you can also email me at my email address, which is seth.bellas@churchillmortgage.com. But probably follow me on socials, sending me a direct message on there, or some kind of notification like that is great. I'm happy to answer any questions. I want to see other people win, and I'm not afraid to share what we've done to grow as a team. And I really appreciate your time as well, Michael. Thanks for asking for the interview, and I appreciate the questions, and I'm really excited to see what the future holds for the mortgage business. I think it's one of the best jobs in the world.
Amazing. I agree. I totally agree. Well, thank you so much, everybody. We've had an insightful episode today with lots of ideas from Seth, from talking about proven strategies in sales, 2 key ideas that he mentioned. Go watch the episode, and also ways to use social content strategy to boost your pipeline. Thank you so much, and I'll see you in the next one.